TMT is very much a focus this week, and it has a lot of sway on markets. What are your expectations? Will big technology be at least a way for us to find a catalyst to slow down the selling?
Well, thanks a lot, Dom. A couple of things come to mind, right? I think a lot of folks were discouraged by what Snap reported last week in terms of an indication that the online advertising market not only continues to be weak, but continues to have a variety of different challenges from a growth perspective. That being said, experts that we talk to suggest that because Snap is so oriented to large brand advertisers, they might not necessarily be as indicative of a company and its performance as, say, companies like Alphabet and Meta might communicate over the course of this week.
So Scott, when we refer specifically to companies like Alphabet and Meta, there's got to be at least a moment of pause, right? After Snap results earlier on, it calls into question a little bit about whether or not there is still going to be appetite for spending on digital advertising from big corporations. Is that a concern in your mind? We heard earlier this week Bank of America analysts downgrade Meta stock because of some concerns about that digital advertising spending outlook. What do you think? Are people still going to spend on advertising?
Yeah, I think if you look at the digital advertising market right now, there's still spending taking place. Obviously, we have the holiday shopping season coming up, which is critical for a variety of companies. I think what's important to understand, though, is that Snap is very different in terms of its profile than a lot of the big tech companies that are focused on online advertising. So you think about an Alphabet / Google / YouTube. Based on conversations that we've had, they are much more economically, let's call it, insensitive to kind of what's going on more broadly. They are a measure of overall intent when it comes to buying goods and services, for example. And so it's reasonable to think that Alphabet is going to perform better than Snap. Now, Meta is a slightly different story. I think a lot of people are looking at that company and asking themselves whether or not the commitment that they've made to the metaverse right now makes very much sense. If you think about the amount of spending and you think about the lack of return that the company is expecting over the next number of years. And so I think, and this was referenced, I think, in the lead-in, that these companies are going to have to communicate some sense of austerity when it comes to their spending plans. Snap has done that. Other companies have indicated that, and we'll see those details over the course of the week.
Scott, we've just got a few moments left here. I'd like to ask you about Apple because it's the biggest weighting in a lot of these indices out there and fund weightings as well. Is Apple, does it deserve to be the safe haven stock that it has been on a relative basis over the past 15 years?
Well, Dom, to think about Apple is to think about a company that is broadly based and has a very strong balance sheet, and people are not necessarily stepping away from the products and services just because of the high and maybe increasing prices. That is a headwind, but keep in mind that they have tailwinds related to new products and the holiday shopping season. So it seems like Apple is pretty well positioned. But again, the key thing for Apple is, of course, those new iPhone sales and how those are holding up. Right now, indications have been mixed, but Apple seems to always confound the doubters when they report results, especially given a lot of reports coming out about volumes being cut, which often, frankly, are incorrect.